What's up, everyone? So obviously, AMC and GME ran today. The question I like to know is why, and I like to find out why. So of course, social media is going to come out with all sorts of different shit for reasons why it's running. Just am I over the years I've learned to just ignore it and look at the facts and company data, company information, filings, things like that, and then of course the options chain to find out if there's anything there that could maybe potentially explain away why we saw the run that we saw today. So let's go ahead and look at it from a data perspective. And to do that, if you wanted to repeat this process, what are you guys talking about in here? Of course, AMC and Jimmy. Did you make that with GPT? Very cool. Very cool. But yeah, they ran today. So let's see if we can find out why. We'll start with AMC. To do this, you just got to do /options all, and then type in AMC. And basically, what this is going to do is it's going to get all of the options for AMC that exist, put it into a spreadsheet for you, and then we're going to download it and we're going to give it to the new GPT-4 Omni to see what is going on here. Oops, I'm already logged in over here. Okay. So GPT-4o or Omni. So we're going to load that spreadsheet that we just downloaded. And we're going to say, hey, first let's visualize the calls and puts with a dark background, red for puts, green for calls. And again, this is the full chain for AMC as of close today. The Greeks do update in real time, like right now as we're speaking, they are updating with SIP data. They will continue to update calls and puts. That's a terrible way to look at it. GPT-4o. Make it a bar plot spanning across all expirations. This thing is extremely fast, by the way. That would have taken like, I don't know, 5 or 10 times slower. There we go. Not bad. So strike price, number of options. 14. There's no way. Is that the full chain, dude? Or I think it might be using the first 500. 30 unique strike prices and 12 unique expiration dates. Let's try this. Total the volume for calls and puts. Okay, yeah, that's right. 1.4 mil for calls, and we have 462,000 for puts. Now, visualize options profit potential across all expirations and average it for calls and puts across all expirations. So we can try to identify where the profit potential is going to be. I mean, that is fast. I'm shocked. Okay, so average profit potential. So I would imagine, so right here, it's slightly above 5. You get 6 here. It's not like a percent or anything. It's just a numeric number. Obviously, the higher that the average profit potential is, the better, despite which position you're in. Like, if you're in puts, you would want a higher average potential profit. And if you're in calls, you would want a higher potential profit. So essentially what we're seeing here is puts skyrockets at 1220 and calls dip down at 1220. That is what you would expect to see. And kind of same thing here, as these are kind of dipping, you would see the puts go up. So the inversion, it's almost, it looks like a mirrored image, right? Like symmetric mirror image. Like you could overlay one on top of the other. It's a mirror. And that's what you would expect to see with calls and puts. So that's how you know the data is good. So what we're seeing based on this is between 517 and 531, or really to 614, middle of next month, we see the OPP trend up, puts trend up with it. So that might indicate that the volatility is going to be extreme, because when volatility goes up, it inflates both calls and puts as far as pricing. And with the rates as high as they are right now, it primarily benefits calls. The higher the rates, the better for calls. The lower the rates, better for puts. That's why if you go to any Black-Scholes calculator and you adjust the risk-free rate, you will notice that if you do so, the put value will go down as the risk-free rate goes up, and vice versa for calls. So what we see here, though, is you want to look for outliers. Like, what's the biggest move? And the biggest move is 1220 puts. It goes from about slightly over 1 to 6. So could this indicate some form of pattern into the options chain? I don't know. We would have to look at more layers of data. So let's go ahead and do now show the. Let me think for a second. We would want to look at open interest and implied volatility across each expiry for calls puts bar plot. Now I'm impressed with how fast this is. That is brilliant. Oh my god. Okay, so let's see if this corroborates with what we just saw. 1220. Well, there's more. Okay, so there's always going to be more puts, right, in the options chain because if you're a hedge fund and you're trading options and you're strategizing, obviously the safer way to go would be to always have some kind of puts open deep out of the money, or if you're selling them, or if you want to acquire the stock, you would get it closer to the money. The reason is that with puts, the reason why you see so much OI with puts over calls a lot of the time is because with puts, the worst case scenario is you acquire the stock, so you're still gaining something. But on the other hand, if you're using calls, then at worst case scenario, you could lose shares or have to buy back or pay for shares at a higher price. So the better part of that is if you go puts, you get to still, even if you're wrong, you can acquire something. That's the difference. And that's why you see so much OI for puts. So this is the average OI across all expirations, and this is the IV. So as far as OI, what do we see? We see way more calls than puts here for the current expiration, obviously. For 524, it kind of fizzles out, and basically it drops, right? It just drops. It trends down, and then boom, on the next OPEX, which is 621, it spikes back up again, and then completely dies off, and really not much action until 1220. So now let's look at this one again. So you see here, 1220 is when the calls dip down pretty big, and the puts skyrocket up as far as profit potential. Then you look at the same expiration, but from a volatility standpoint, and now you can understand why this might be such a profitable opportunity. It's because there's really it's lower IV, so it's not as high of prices. So as if the price is more accurately, or if the price of the stock is accurate, the price of the options are accurate. Obviously the implied volatility is going to want to be lower because the higher the IV is, the higher inflated your options are going to be. So there's essentially no open interest here, but you got lower IV than what you have now. The IV here for puts is ridiculous. Calls is not nearly as bad, but for puts it's ridiculous, and that is a directionless trade. So if you trade IV, sometimes it doesn't matter which way the stock goes because if the IV goes up enough, if there's enough volatility, you'll profit regardless. So, anyways, that's just a fun way and really quick now with this new shit. Oh my god, like that would have taken all this would have taken me like at least 15 minutes to do, but here I was able to explain it. It did it real quick, and not bad. Just for shits and giggles. Actually, I'll do that. I'll do it now. Fuck it. Log in to analyze, man. Chuck this in. Oh, what? Oh, I don't have a virus on my computer. Of course. Or is fidelity compromised? Which one is it? Okay, probability calculator. Let's do AMC, and I'll look at GME too while we're here for the data. That's for today. Don't get too excited now. Let's go for tomorrow. Oh wait, no, okay, that is for today. Tomorrow, it's still 100% for tomorrow. What do you know? It's probably due to the after hours price, I would assume. Let's go 15. Well, I guess I should make a separate video for this. That's crazy. Holy shit. Anyways, I will, yeah, that's how you look at options. But hey, we might as well do GME just real quick. But yeah, holy fuck. 100% chance, basically. So, you didn't hear it from me. You heard it from Fidelity, all-seeing calculator. Okay, I'm gonna do GME. Everything's been crashing on my computer lately. I need to like figure this shit out. Okay, let's do GME. Oh, did my studio code crash too? Failed to request of size. Yeah, something's going on with my memory, man. Something is going on with my memory at this computer. It's probably the disk space that I'm using up. Let's try that again. Yeah, it's crashing. Well, anyways, that's it for this one. I'll do GME in another one.